PUP Coin is one of those small-cap, community-driven tokens that can feel like stumbling onto an underground concert before it goes mainstream. Exciting, noisy, risky, and full of personalities. So for anyone listening right now, imagine we're unpacking the mystery box. What is PUP exactly? Who's behind it? Why people are buying it? How to analyze its upside and downside? And what every sensible investor should know before ever clicking buy. First, the basics. PUP, often listed as PUP token on major trackers, claims utility tied to dog-related projects and community initiatives, and is marketed as a mem-utility hybrid that attempts to combine real-world utility. Some team pages describe rare dog pre-orders and charity mechanics with mem-coin-style community incentives, a positioning that gives the token immediate viral potential while also creating unique regulatory and execution risk if the real-world utility proves difficult to deliver. Notable public data aggregators such as CoinGecko and CoinMarkets show PUP listed with live market data, price snapshots, market cap, and basic supply info, and additional third-party aggregators like Creakomus and CoinStats also display price and volume metrics, meaning the token has at least some on-chain liquidity and market visibility. But visibility doesn't equal safety, it only means people are trading it. Now, why do communities rally behind tokens like PUP? The short answer is narrative plus simplicity. Low nominal prices, it's only a few cents per token. Strong social media memes, influencer shoutouts, and clever tokenomics that reward early adopters create a social feedback loop. Posts, hype, FOMO, more holders, and sometimes a dramatic price run. But running this loop successfully requires trust in the team and real token demand from use cases. In PUP's case, the team's stated angle, bridging blockchain to rare dog purchases and canine charities, can be powerful if executed with transparency audits, verifiable contracts, open charity wallets. But it creates a high bar for credibility because real-world goods and cross-border transfers invite legal, logistical, and tax complexity that pure on-chain projects avoid. Let's break down tokenomics and on-chain signals you should check before taking any position. Total supply and circulating supply. Some sources show varying figures. Double-check contract data on Etherscan or Skaknon depending on chain. Token distribution. How many tokens are held by the team owners? Large wallets. Whale concentration matters enormously because one wallet dumping can obliterate price. Liquidity pool composition. Is liquidity locked or can it be removed? And if there were a fair launch or a pre-sale with preferential allocations. If the project mints small supply numbers like 420 PUP or oddly rounded supply units that appear on some listing preview pages, there can be a red flag of mem-first tokenomics rather than a robust economic model. And if listing pages show self-reported circulating supply, you should be skeptical. Always verify contract data yourself or with a reliable block explorer. From a market data perspective, PUP has appeared on major trackers, with price and volume available across multiple platforms. This is encouraging because price discovery is happening, but you must watch liquidity depth and exchange listings. Is PUP trading on multiple centralized exchanges or primarily on DEXs? Listings on reputable KEX usually increase visibility and liquidity but also invite regulatory scrutiny. DEX-only tokens can be easily listed but can be manipulated by low liquidity trades. For traders, common setups that create volatility in tokens like PUP include whale accumulation, social media-driven spikes, and liquidity pair manipulation. Look at 24-hour volume versus market cap. An unusually high volume for a tiny market cap could mean wash trading or heavy speculative activity, while extremely low volume means you may not be able to exit a position without moving the market. Technical analysis matters only as much as the underlying narrative. For short-term traders, watch simple indicators, moving average crossovers, RSI extremes, and volume profile on token pair charts. But for longer-term holders, evaluate on-chain metrics like holder count growth, token transfer velocity, new wallet inflows, and contract transparency. Next, community and team. Tokens like PUP survive or die by community trust. Check social channels, Twitter, X, Telegram, Discord, repinned messages and team bios, and ask whether the team has verifiable, public identities or whether the core members are anonymous. Anonymity isn't an automatic deal breaker in crypto, but it raises counterparty risk, especially when real-world services like buying a rare XL bully dog are promised. Also inspect whether the project has been audited by reputable smart contract auditors. An audit reduces but does not eliminate smart contract risk. Verify whether audits are recent, whether the auditor is trustworthy, and whether the audit report is public. Charity and cause-driven mechanics can be sincere or just marketing. When a token promises donations or charity payouts, look for on-chain proof, dedicated donation wallets, on-chain vesting, Sablia-style streaming contracts, or verifiable receipts. A token claiming "well donate" but with zero on-chain proof is a P to play until proven otherwise. Now, let's talk about scenarios. Best case, PUP develops real utility, streamlined dog pre-orders, transparent charity payouts, NFTs or membership access tied to token holding. The community grows organically, liquidity widens, and larger exchanges add the token, producing sustained price appreciation. Worst case, the token is primarily meme-driven with concentrated whale ownership, minimal liquidity, and an inability to deliver on promises, making it vulnerable to rug pulls, sharp dumps, or delisting. Middle scenarios include periodic pumps driven by viral marketing and influencer posts followed by corrections that leave only long-term believers holding the bag. Risk management should be explicit. Never allocate more than you can afford to lose in speculative small-cap tokens. Set clear position sizes e.g. a % of your total crypto exposure. Use stop losses or sell targets, and plan your exit strategy before entering server-side. FOMO is a quick path to losses. If you plan to make a video or script about PUP, and you likely do if you're reading this, structure it with a strong hook in the first 10 seconds. E.g. is PUP the next meme breakout or another rug? Then present concise facts: market presence, supply, liquidity, purported utility, show on screen evidence, links to CoinExpo pages, contract address, liquidity pool snapshots, and finish with clear takeaways, the potential catalysts to watch: exchange listings, verified audits, partnerships, verifiable charity distributions, the top red flags, anonymous team, lock-and-dolkant liquidity ambiguity, suspiciously high team holdings, and a calm reminder that even the most exciting token narratives can collapse overnight in crypto markets. For those doing deeper due diligence, read the white paper line by line if one exists, verify the smart contract address on a block explorer, check token holders list for concentration, search for historical wallet patterns, e.g. repeated transfers from a team wallet to exchanges, and cross-check marketing claims with verifiable press or partner confirmations. If the project sells real animals or physical goods, ask for receipts, escrow details, and independent third-party confirmations. Physical deliveries across borders create regulatory complexity and potential legal exposure for token holders if promises fail. On the flip side, some token projects successfully create niche ecosystems by combining NFTs, membership access, and tangible rewards. If PUP can prove reliable delivery of its stated utilities and maintain an active volunteer and buyer community, it could evolve from meme coin to micro-ecosystem, but that evolution requires good governance, transparent treasuries, and ongoing development milestones that you should track on a published roadmap. Timing and sentiment matter. Meme tokens often follow broader crypto market cycles. When Bitcoin and Ethereum trend up, risk-on appetite allows smaller token narratives to thrive. When markets correct, speculative tokens are frequently the hardest hit. Watch macro indicators and liquidity in major coins because they often dictate the available capital that can flow into speculative plays. Practical buying tips: if you decide to buy a small amount for speculative reasons, use limit orders, double-check contract addresses to avoid phishing tokens, consider moving tokens to a self-custody wallet if you're holding beyond a trade, and monitor token approvals to avoid malicious spending allowances. If you're creating content around PUP for YouTube or social platforms, disclose any positions you hold to avoid conflict of interest issues, and always include a not financial advice disclaimer. Present both bullish and bearish evidence so your audience gets a balanced view and can make an informed decision. Finally, the moral and legal dimension. Tokens offering real-world goods or charity should be held to high standards of accountability. Demand receipts, proof of funds, and audit trails. Regulators around the world have increasing focus on tokens tied to off-chain commerce or fundraising, and projects that ignore compliance may face listings removal or enforcement actions, which can crush token value overnight. In short, PUP is an intriguing microcap with meme energy and a potentially unique real-world niche. But it's exactly the kind of project where careful on-chain verification, skepticism about marketing claims, and disciplined risk management determine whether you walk away with gains or losses. Treat hype as hypothesis and require evidence before conviction. Check contract data, holder distribution, liquidity locks, audit reports, and charity proof. Watch social sentiment and volume patterns, and always size positions to the small, speculative risk portion of your portfolio, because while a coin like PUP might deliver outsized returns in a best-case scenario, the same structure makes it vulnerable to sudden and total loss in a worst-case scenario. Conclude every segment of your coverage with a simple checklist for viewers: verify contract, verify liquidity lock, confirm audit, inspect holder concentration, confirm real-world partner proof, and remind them, do your own research, don't chase FOMO, and only risk what you can afford to lose. Not financial advice.